One thing that I think is interesting to look at now that we have fully moved into a new phase of the housing market where home prices are down month over month in almost all metros across the United States. And the issue is that a lot of home sellers typically do not keep up with these trends as quickly as you and I do. We're watching these videos every day. I watch videos about real estate too, even though I make them. And people who are not in tune with what's happening on the day-to-day are just kind of out of touch with reality and still think they can get prices from a year ago, which is not happening, guys. And there was an interesting story I saw today about a home seller that thought that they could do this and some of the reality checks that they're being given right now due to how things have changed. Here's what this home seller said. We have to move for family reasons and put our house up for sale, right? There's always a reason why people need to move, of course. It has been several months and we are not getting much interest. Our real estate agent keeps telling us to lower the price, but I know what our home is worth. Just a year or so ago, right? Several nearby homes sold for more than our listing price. What's going on? And here is the response to this outcry from the seller. This change in the market that we're seeing is caused by a bad economy and rising interest rates, which a lot of us already know. And even though we had this huge run-up in the housing market, that was then and this is now. That's basically the response to this. And I just love this, guys. I love reading these things, and I love when people need to get the reality check and the wake-up call of where things are, because it's just amazing that people are just delusional in the sense that, oh, I saw a house sell for a year ago and I think somehow I should get that amount. No, guys, that's not how it works, okay? There's this myth that real estate always goes up. Well, it doesn't. I'm here to tell you that that is a flat-out lie. And a lot of people out there right now are finding this out the hard way. And basically the days of over-asking offers and bidding wars is over, except in areas where prices still make sense, guys. You can still see this happening right now in the spring market of 2023 in areas that are still deemed to be affordable. And I covered this already in yesterday's video. So if you missed yesterday's video, before you make a comment saying, you know, I'm seeing all these bidding wars still and everything's flying off the market where I live and I'm just not seeing this happen, Michael, go watch yesterday's video and then we'll talk. But here's the rest of the story, guys. Property taxes are up, insurance is up, interest rates are up, which makes mortgage payments go up, and home buyers are limited by their monthly budget of what they can afford for a house payment. And because people have more debt than ever before and more things that they have to pay for than ever before, you know, the budget's just not there to buy at the prices that we're seeing, which is why you're seeing prices come down practically everywhere. And what this does to people is it makes them look for less expensive homes, right? And then what happens is it ends up being this big domino effect. You have people that are looking for less expensive homes, and the more people that buy the less expensive homes, then the more expensive those less expensive homes become. So that's what we saw during this huge run-up in the housing market, guys. You know, you saw places that would typically sell for $250. Well, now they're up to $450 because a lot of people could afford properties in those price ranges. And with remote work, people that live in very expensive areas are able to come in and swoop in and buy up those cheap homes, and that's nothing for them. And we know that people are having a hard time affording everything right now because of the sheer level of debt that people are in. I made a video a week or so ago talking about how much the debt levels have been going up across the board, guys. We're talking higher debt levels for mortgage payments, higher debt levels for car payments, higher student loan debt levels than ever before, higher personal debt levels for things like credit cards and personal loans and all this different stuff. People are just in massive amounts of debt and there seems to be no end in sight. It's just continuing to go up. It's not going down. And the more people go into debt, then the less affordable housing will become for the everyman. And basically, the premise of this story is who cares what houses were selling for a year ago, guys? Throw that out the window. Doesn't matter. All that matters is what a buyer is able to and willing to pay right now. That's how real estate works, and that's how it always has worked, okay? A home is never going to be worth more than what someone is willing to pay. And that's why you see this insanity going on here where I live. You know, these houses that used to sell, all these houses, guys, were like $500,000-$600,000 10, 12 years ago, and now everything's well over $1 million because there's somebody who's willing to come in and pay that price. If there wasn't, then those houses would still be probably $600,000-$700,000, maybe gone up a little bit, but not to the level that they have now. And so the advice here from this story is, look, if you want to sell your house now, make sure that the price is correct, okay? That's the main thing. That's always the biggest thing, guys. The number one reason properties don't sell, price is too high. But beyond that, make sure the property shows well. Make sure it's, you know, appealing when people walk through your home. Does it smell good? Does it look good? Is there clutter everywhere? Is there a mess everywhere? And I want to add my own part to this story, which was always the most annoying thing ever when it came to showing homes, is sellers that insist on staying home during the showings, guys. Like, if your realtor tells you I have a showing in 15 minutes, just leave, you know? Go drive around the block a couple times or go for a little walk and just get out of their hair, because there's nothing more intimidating and annoying to the buyers than when they go to see a home and the seller's just breathing down their neck, trying to point everything out and you know, make sure that they know everything, because it's like you're trying too hard, you know? When sellers are there trying to give all this information and basically you just talk too much, you just shoot yourself in the foot a lot of times. Just a quick little tangent here. Like, my theory always was, when I was selling real estate full time, is you don't really sell real estate, guys. I was always of the opposite mindset. Even though it's a sales career and a sales position, I always felt like the homes sold themselves. And what I mean by that is, if you listen to your clients and you really hear what they're telling you in terms of what they want for the budget, the features of the home, the location, etc., and you find properties that match what your client wants and you show it to them, you don't need to sell them the house, okay? The house will sell itself to the right person that's interested, guys. You don't have to walk through the house and say, oh my God, look at this and that, and couldn't you just see yourself living here? Oh my God, what about that view, guys? And blah, 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 blah. Like, none of that is necessary. People will see that on their own, and if they're interested, they will make an offer and buy that house, okay? You do not need to sell the house. That's how I always worked it, and it worked out wonderfully for me. You know, I never had to push my clients to buy something that maybe they weren't interested in just to make a sale. And so the other part of this story is, if you're a home seller right now and this is a similar struggle that you're facing, that you are looking at the prices of a year ago and you're wondering why it's not selling, you need to get with the program of today, guys, because today is a different story than it was a year ago, 2 years ago, whatever. If you're not willing to accept the fact that prices are different today than they were a year or two ago, then you're probably not going to be able to sell, because you're just going to be in this dream zone of a price that is just unrealistic for today. But the funny thing about all of this is, it just seems like there's always some new type of program or incentive coming out of nowhere to try to help people get into homes at basically the worst time ever. You know, it seems like governments and mortgage lenders and even companies now have just these programs that are just doing anything right now to get people to buy a house at basically the worst time ever. And the perfect example of this is this new program that's coming out from Better.com. Better.com is an online mortgage lender, and what they're doing is they now have a program for Amazon employees, and they're able to use their shareholdings as a company employee as collateral for a down payment on a home. So Better.com is saying, hey, you don't have to give a down payment on this property. Instead, we'll use your Amazon stock as collateral, and if something happens to the property, or you can't make the payments or whatever, then they'll take your home and your Amazon stock essentially. And that's kind of the deal with this. And of course, Better.com is charging people that actually do this a higher interest rate versus people who are coming in with cash down payments, because obviously there's more risk here. And they're taking on the risk that, hey, if the Amazon price goes down for the stock, you know, Better.com is going to be the ones kind of stuck with the bag here on this. But do you see what I'm saying? Do you see how lenders and just everybody is trying to do anything they can right now to get people to take on additional loans, additional risk that they would not otherwise be taking, but because these incentives are out there and available, people are doing it, okay? That's the scary part.
Now this house looks to be the perfect example of pricing way too high from the very start. When they first came online, they were asking almost $2.9 million, and they've had 2 price cuts, and now they're down to $2.5 million. That is a $400,000 price cut in just about the span of the 2.5 months this property's been listed. So usually you don't see that big of a cut for a listing that's only 2 months old. So it means they're probably motivated, but they had a lot of misguidance from the beginning, either from their realtor or from themselves, that decided to price the property too high, and it would likely already be sold if they just would have listed it right.
And look at this email that I got from a mortgage lender recently, okay? Here's what it says, guys. Tip of the week: whenever a potential buyer tells you that they don't want to buy because they think the market is going down, share this stat. Zillow estimates 23% appreciation in home values over the next 5 years. If someone were to buy a $500,000 house and we saw 23% appreciation over the next 5 years, that would gain $115K in appreciation. And imagine putting just 5% down on a house that's only 25 grand on a house like this, and in just 5 years you made $115K in appreciation. This is the power of leverage. You get the benefit of appreciation on the full $500K, not just the $25K out of pocket, and the $475K the lender gives enables the buyer to benefit from the appreciation on the entire asset. Now the leverage part of this is correct, that you use the bank to leverage when you buy real estate, and it helps you gain wealth through leverage. That part is indisputable and is 100% correct. But here's the scary part of this email, guys. Zillow anticipates a 23% increase in home prices in 5 years, okay? This to me is the biggest joke of all right now, because they're talking about home prices going up 23% during the same time period when they should be going down by 23%, which to me is you can't have both. Both of them are not going to happen, okay? It's going to be one or the other. You're either going to have home prices going up or you're going to have home prices going down, and it's going to move in one direction for quite some time. And for lenders to come out and say right now that this is what's going to happen, and if, and that's the big word, right? If it goes up by 23%, you benefit from this. Well, guess what? You also get the same benefit if it goes down by 23%, only difference being, well, now you just lost 23% of your home's value instead of gained it. You know what I mean? But I'm seeing emails and articles and different things like this week after week, just telling people things like this, that you need to get in right now before it's too late, is essentially what they're all saying. And unfortunately, guys, it's just not true, okay? They're telling people this to scare you into buying while at the top of the market or close to the top of the market before everything goes down, because you got to remember, these industries are hurting. You know, mortgage applications are at 28-year lows. So mortgage lenders right now are going to do and say anything that they can to bring in new business right now. And to me, that's the source of all of these news stories that we're seeing. And this is also why you're seeing companies like Better.com give Amazon employees the ability to pledge their stock as a down payment for a home. Why? Because number one, the Amazon employees probably don't even have the money for a down payment on a home, and they're letting them use their stock instead. It's just like a recipe for disaster, guys, because think about it. If you don't have even the money to put a down payment on a home, and just one thing goes wrong. And Amazon's been a big company this year, by the way, laying off thousands and thousands of its employees, and say you're next and you just jumped into this program, well, you lose everything. You lose your Amazon stock, you lose your place to live, and now you're completely screwed. So who thinks this is a good idea right now? Just let me know, guys, because I think all of this is just nothing but games that companies are playing to just get people to take the leap into a new house at basically the worst time ever. And you know, one other thing that I think is not talked about nearly enough is just the sheer amount of inventory that's going to be coming to the market within the next decade. We already have a lot of home building going on and a lot of new units set to be delivered just this year alone and next year as well. But besides all that, and besides the spring buying season and selling season that we always see, there's another part of this story, guys. And what it is aging baby boomers who need to move, okay? And there was a great story about this today, talking about how baby boomers, a lot of them would like to age in place. Basically, 80% of them said that we don't want to go to a nursing home, you know, and we don't want to live our final days like that. We want to stay in our home and get old and die here, which I agree with. You know, if I were in that position, I would say exactly the same thing. I wouldn't want to go to one of these places. I just want to be in my own house, in my own comfort until the end, you know? But the problem with that desire is, it turns out a report from the US Census Bureau says that only 10% of homes across the entire country are able to accommodate people aging in place in terms of having things like a bedroom and a bathroom on the first floor, one or more bathroom accessibility features, you know, no stairs in the house, no stairs to get up into the front door of the house, different things like this that just make it easier to live in a house as you get older. This story talks about how by the end of this decade, so it's 2023, so you're talking by 2040, all the entire baby boomer generation will then be 65 or older. That's retirement age and the last phase, so to speak. And already 28% of people in this age range right now are having a hard time and basically just staying there because of the accessibility issues with it. So a lot of these people who want to age in place and have the money to do so are planning on doing some modifications to their home by doing things like making modifications to the bathroom, installing a medical emergency response system, making the entryway more accessible, whatever they have to do to make it easier to use their house on a daily basis. But the other side of this story is that's only available to equity-rich people that actually have the money to make these modifications to their home. And a lot of elderly people that would like to age in place don't have that ability to, simply because many of them live on a fixed income. And say you want to hire like a live-in nurse, something like that, that can cost like $5,000 a month. And as of 2019, so we're talking pre-pandemic here, more than 10 million households that were headed by somebody 65 years or older were already cost burdened. So this is before we had this massive run-up in inflation and all the problems we're facing right now. You can easily say that that number has probably gone up by a lot since then. Well, let's just run with that figure for a minute. 10 million households cost burden right now that are 65 years or older and will likely be looking to downsize within the next 10 years or so, guys. Imagine the amount of inventory that's likely to come to the US housing market through just that avenue alone. And this is something that's not talked about a lot, but it's something that's going to happen in the future. It's basically a guarantee. And you could say, well, maybe some of these people won't sell, they'll pass it down to their family members or give the house to their grandkids or whatever. Almost all the time, when that happens, when people inherit real estate, they don't want the property, guys. They usually just sell it. They just want the money, you know? So when that happens, granddaughter dearest inherits, you know, grandma's old house. Do you think she's going to go and live in the house? Probably not. She's probably going to turn around and sell it to the highest bidder. And so what they're saying here is most of the baby boomers who would like to age in place, as much as that's a great idea, will likely end up downsizing to something smaller. So say you're in a house like this, you'll probably buy you know, just a regular one-bedroom apartment that costs a fraction of what this house does, that you can afford on your fixed income without too much trouble. I think this is going to be the real estate trend of the next decade or two that's going to completely debunk this myth of the housing shortage that everybody's been talking about. Because what happened, guys, is we just had so many artificial things take place in the market that made it appear like we have a housing shortage. You know, you had a lot of people not wanting to move out of fear of the pandemic. You had ultra low interest rates making borrowing money historically cheap. You had a bunch of sellers that wanted to list and get top dollar for their homes once they saw that there was all these bidding wars going on and people paying over asking price. So you just had all these things happening in the market that incentivized a lot of people to get in on real estate when the getting was good. And rightfully so. A lot of people got some excellent deals during this time frame. But what it does is it makes it look like there's a housing shortage, because temporarily there was, but it's not going to last. It's not going to be a permanent shortage. But the baby boomers that want to age in place, that, you know, have this notion that they're going to be able to stay home until their last dying breath, they're also at the mercy of where the housing market is at the time. So, for example, if Zillow is wrong, like they've been talking about here, like we just mentioned a little bit ago, this 23% increase in home prices in the next 5 years, if it goes the other direction, which is looking way more likely at the moment, and say you're somebody that wants to age in place, but you decide, you know, you figure out that that's not really going to be possible because your house is not that accessible and you need to sell in a down market, this is going to be bad news for people like that. But it is just yet another one of those situations, guys, where someone else's loss is someone else's gain. And, you know, I don't like saying it like that, but it's just the truth. It's just the way the world works. And, you know, someone else's loss can be someone else's golden opportunity. And for a whole generation, you know, the younger generation right now that can't afford homes at these prices, this is going to be a welcoming thing. This is going to be something that a lot of younger people might be able to look forward to in the next several years.
And then you got this house that just plays all kinds of games with the price, and this is what I hear people complain about, and rightfully so. If you take a look at this listing chart here, they started off asking $9 million back in September last year. $1.5 million price cut later, it's down to 7.5. But you see on this listing sheet, it looks like they only lowered the price $300,000 and listed it 86 days ago, which is just not true, because a lot of times agents will have the listing go up and then take it off the market manually and then relist it as a new listing and make it look like they're not cutting the price like crazy. But obviously $1.5 million is a lot.
Last week we talked about how the United Property and Casualty Insurance Company has now been the 7th one to go insolvent within the past year and a half here in Florida. And it turns out these guys are about $550 million in debt. And the state-created Florida Insurance Guarantee Association is going to have to step in and pay claims and take over until further notice. And they have to come up with a way to pay all these debts and unpaid claims. And what does that mean for all of us living here in Florida, guys? It means that insurance prices are going to go up, because where do you think they're going to get that $550 million from? They're going to get it from you, they're going to get it from me, everybody that pays car insurance here, and homeowners insurance, and renters insurance, whatever kind of insurance you have here, it's going to go up because of this. To me, that's just one more reason that it's baffling that so many people are still moving here and, you know, still paying ridiculous prices for homes here and getting slapped with these huge insurance bills like it's nothing. That's where things are at. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.